Let's continue this conversation now with Scott Phillips, the Chief Investment Officer at Motley. What are your takeaways from this Deloitte report? Scott, good morning.
Pete, good morning. This is, I feel like a broken record, mate. We're in a good news is bad, bad news is good type economy right now. We know that the stronger the economy is, the more work the RBA is going to have to try to do. And frankly, the higher inflation is going to be because of those capacity constraints we have talked about over and over again. So on one level, a weaker consumer confidence number isn't the worst thing in the world, as much as it sounds ridiculous to say, because it helps us get back on that even keel more quickly. Now, the key challenge for everybody, for the government, for the RBA, is to try to work out how to slow this thing down, how to resolve those capacity constraints, how to keep pushing inflation down without letting things like unemployment jump, business failures. Those are the big challenges for our economy. So, mate, not a surprise in the numbers themselves, but it is a question of, how weak is too weak? How strong is too strong? What's the right path in between? I'm not so uncomfortable, frankly. What I like about the numbers currently, and this isn't just Deloitte, we're seeing consumer confidence far worse than business confidence. And that's kind of exactly what you want, because while businesses remain relatively confident and we know unemployment is low, there's a good chance they're going to continue to hire or keep their staff on. Where the risk is if business confidence also falters, follows that consumer confidence, and it may, as spending slows down, that is a risk for hiring, for capital purchases, for business failures. So, normally is a great number. No, I'd be normally saying in normal circumstances, low consumer confidence is terrible. But right now, I'm not sure it's not a bad thing on the way to the path we need to get on.
What's a consumer recession? What's the difference between that and another recession and a general recession?
A headline writer's preferences, I suppose. Look, no, it would come down to the effectively retail sales, our own living standards as individual consumers going backwards while GDP continued to grow. So imagine a scenario where, and it's not that hard to imagine, oil and gas exports remain strong, iron ore exports remain strong, business confidence, unemployment remains strong, but we have higher interest rates and higher inflation, basically dragging back consumer spending and our standard of living. And kind of, honestly, mate, it's one of those catch-all terms. It doesn't really mean anything in particular. But if you think about where we are now, we're kind of in that already. If you've got inflation rising at 5, 6, 7%, and wages growing at 2 or 3%, that effectively means we're going backwards at 4% a year. In any other circumstance, at an individual level, that's effectively a recession, right? Unless you're getting a 7% pay rise, your standard of living fell versus last year. It'll probably fall again in the current year. Again, if we're defining terms, that's as close as you need to get to a consumer recession anyway.
Okay, Jim Chalmers has got to find a whole bunch of money, Scott. So there are discussions, or there may even just be balloons. Thought balloons, as a term we've used this year a few times. It's over capital gains tax changes. We're here again, plus higher taxes on gas companies. Just had the Chamber of Commerce on this. They are, not surprisingly, not a fan of any changes. But what are your thoughts on that?
Yeah, ask someone who pays tax whether they should pay more tax, mate. You'll get a resounding no from everybody. A couple of things. So, look, I've been a fan for a while, mate. Look, I'm not going to be the most popular bloke in the world this morning. I think our resources companies should pay more for the minerals they extract. Or put more specifically, the Australian people should keep more of the proceeds of those minerals and resources that we allow them to extract and then sell. The difference between BHP's profit, for example, and the resource royalties they pay is extraordinary. So I don't think, if the Australian population, if we own those resources, let's put it another way, mate. If you told Macquarie Bank tomorrow, they can have royalty rights over every resource in the country and ask them how much they would charge BHP or Rio or Santos or Woodside to extract them, I would absolutely guarantee it'd be a whole lot more than we get now. So I don't mind that one. Capital gains tax is also an interesting one. The 50% discount for what is in the theory long-term gains is really 366 days. Now, as an investor, someone who is a long-term investor by nature, that's not long-term in anyone's book. And I don't know whether 364 days, 366 days, the capital gains tax should be halved. I don't mind indexation being returned, and here's why. Selfishly, as an investor, but also for the public purse, if I hold an asset for 5, 10, 15, 20 years, I might actually be better off, particularly where inflation is right now, getting it indexed rather than an arbitrary 50% gain, because at some point those lines cross over. You actually would save more or pay less tax having that indexed over a couple of decades. Now, if you're going to sell after 18 months, of course you want a 50% discount. If you're going to hold for 25 years, say property investors, for example, I think most of those, work backwards, think about property price over the last 20 years. You would have been better off having that indexed rather than having an arbitrary 50%, because at some point, as I said, those lines cross over and you're worse off. So capital gains tax, I think it's probably going to be revenue neutral over the long term anyway, because of that indexation. So it's probably just a question of what the right thing is for the budget and for investors.
I kind of agree with you on the PART. We're about 40%, right, at the moment, Scott. I mean, I think it's Norway, one of the Nordic countries anyway. It's up, it's about 70%. So it's gives you an idea of how far we can potentially.
I think it's unreasonable, mate. Yeah,
exactly. Chat to you soon, Scott.